What's going on, everyone? Today I'm going to be talking about premium and discount ranges and how to draw them. And a lot of people are kind of get mixed up with this because they're like, oh, if you draw it from this spot, why couldn't you draw it from this other spot? Blah, blah, blah. So, for example, like if we were trying to long, let's say we thought this was market structure shift and we were trying to long, well, the premium versus discount in this range would be from this low to this high, and you can clearly see why that is. There's an obvious high here, and it's this impulse from way down here to way up here. Okay, so this is kind of obvious how I drew this fib, and some people might say, well, oh, are we in discount or are we in premium? Or I'll even ask people, I'll be like, well, your trade didn't work because you're in premium, and they'll show me their fib, but it's drawn kind of wrong. So I'm gonna teach you guys how I draw them and how I think you should draw them. So first things first, what I think you should do is I think you should go to like the 1 hour, and I think you should draw a fib in the bigger time frame. So to see where discount is, okay? So on the bigger time frame, we see that this fib has a 0.5 and has a 0.75, and the 0.5 is a 4026.75. So I'm just going to mark that level with a giant red line, 4026.75. So I know this is premium up here, and I know this is discount. So how do I use that when I intraday scalp? Well, in this position, in this spot, I saw that we were under the discount, okay, and I saw we kind of bounce here. We had the market structure shift, so we clearly broke this last higher low, or lower high, I mean, and we had the fair value gap, which was right here, and it was a little better in the 1 minute, but I'm not going to go in the 1 minute right now. And then we bounced, okay? So once we know that we are in this, on the higher time frame, we are in premium again, okay, on this time frame. Well, you can long, but technically I would not really be chasing longs when we are premium in the higher time frame. So if you did draw a fib from here to here, technically when we go back into this under the 0.5 here on a 4046, yeah, you are in discount on this time frame, okay? Like on this time frame, you are in discount, and you can see as soon as you wick under it, we kind of go up again. But we have bearish order flow, meaning we have lower highs and lower lows. We have this fair value gap right here, and we also are still in premium on the bigger time frame, okay? So that's something definitely to keep into mind. So how do I draw them when I'm doing like intraday plays, okay? So in this example right here, I always draw it from the most obvious recent swing high to most obvious recent swing low. So from here to here, okay? And you can see we went above premium. We rejected this exactly. And I'm going to kind of show you the difference. So if I go to the 1 minute and I go to the same thing, okay? Some people would be like, well, no, you could draw it from here, this swing high to this swing low, okay? And yes, you could, but do you see how not defined this is? Like, this is not defined at all. It's like a mini swing high, okay? This is like see how clear and pointed out this is? And this is the last swing high created before this giant up, okay? So this is why I would draw it from there to there. Something like this. If I was trying to go look for a long setup here, what I'll do is, do you see how this is really defined? I'll draw it from this low, because this is the most defined, to this high. And you can see we break right under discount a couple times, and we go back up. And then, boom, we make a new high here, draw it higher again. And then, same thing up here. We wick under discount every single time. So, before you even have these candles, I'm always drawing it from the most, it has to be an obvious swing high, okay? So we get this 3 candle setup, we get a higher high, and then lower high. But you can see how defined this is. We have a clear rejection here, we have a clear pivot right here. So it has to be from that, and it has to be the most recent one. So if we were doing something like this, okay, if we were doing something like this, you can see this is the most recent one, but some people be like, well, you could do it from here too. And yes, you can do it from here if the momentum's really down. So in this case, knowing that we are in premium on the higher time frame, you can get away with drawing it from this one because this is kind of technically defined. But but you can see this would have been a better retracement up here if we wanted the short, right? So I'm going to show you a couple more examples. I'm going to show you an example that I do that some people don't. So right here, okay, do you see this retracement into this fair value gap? Some people be like, oh, it's not a premium. But like, because the momentum is so down, what I will do is, you can see like we have a tiny swing high here, like boom, boom, boom. We have the higher high, higher high, lower high. So like you can draw it from there technically, and we can see we bounce right out to 0.705. But you need to make sure a fair value gap lines up with like a significant like order block, whatever, 0.705 maybe, which is an optimal trade entry, in order to use these. I would really recommend not using these until you get practiced on like using these tiny like swing lows and highs, because sometimes it's just screen time where I know whether they're going to work or not. So meaning if I drew it from here to here, I never would have gotten an entry. And then I'll be like, oh, I missed my entry. It never even came in the premium. But if you drop from here to here, yes, you did get your entry. Yes, it did go hit the 0.75, and it did hit this recent swing high, okay? And you can see that this is the most recent swing high. We have the 3 candle formation set up. We have the higher high, lower high. We do not get the lower low, lower low, and then higher low until right here. So this is why I drew it from right there. And you can see this is obviously pretty defined. Sometimes you might get a setup like this, but it might not be defined. And the reason why I really like this example is because we have clear order blocks here. So I really like taking fair value gaps that are under like order blocks. And you can see, boom, 2 green candles, giant dump. So those are going to be significant order blocks if we were to hit them. And I think those fair value gaps work the best, in my opinion. In this example, you can see, obviously the bias is short, but in this example, you can see we could draw the fib from here to here. And this fair value gap right here, only half of it's in discount, okay? But I would not draw it like here to here. Why? Because see how defined this is? This bounces off a fair value gap in itself. This is kind of a new defined low, so I would actually draw it from here, this low, to this high, because this is the most obvious defined low. And on the way up, we don't get that 3 candle formation setup where we get a higher high, lower high. We just keep going higher highs. It comes close there, but we never get it. And then we finally get it right here. Higher high right here, higher high right here, lower high right there. And then another higher high, lower high right there. So that's going to be your swing point. And there was, and on the 1 minute, it's definitely, like, if you're on the 1 minute, I'll draw it from the most recent one. So meaning, what do I mean by that? So basically, let me try to find an example real quick for you guys. This is the no volume stuff. So like I'll try to find the recent to most recent one. So like right here to right here, which is the most recent. But on the 5 minute, it's gonna look different, obviously in this situation. But that's only if you're trading off the 5 minute. So right here, you can see that this is the 1 minute one. And it is a swing high in the 5 minute, as you can see. We get the higher high, higher low, lower high. And we actually never hit discount. But if it was the 5 minute, I'll drop from here to here. But that's only if I'm trading in the 5 minute, okay? But you can kind of see how that works. Again, if you're in the 1 minute taking only 1 minute plays, you really want to be, like, you want to draw it from the most recent one. So like in this situation, it would be this to right here, okay? We never get the entry, we make a new high, so I'll change it to up there, and then we finally bounce out this 0.705 fair value gap and optimal trade entry, almost come back down to it, and then we bounce again. Oops, that was my phone. So right here again, like some people would be like, oh, would I drop from here to here, or would I drop from this defined low to this defined low? Well, both work, obviously. You both go in the discount, but in this situation, I'll definitely drop from here to here because this is the fair value gap bounce right here. So this is a very defined lows with a bunch of buy orders sitting in it, versus this is kind of bouncing off an insignificant point. So I'll draw it off here. Again, some of this stuff is really going to take you screen time to get down. I used to have the same question a lot. But you really want to draw an impulses. So you can see how we get this is a giant impulse. So this would definitely be the range I'll draw it in from here to here. And like again, if we go down here, we have obvious defined high, obvious defined low here, okay? And we do have an obvious defined low here at first, but we never come up to the entry. We break down again, so I'd keep moving my fib down until we got an obvious defined low. So we finally get it right there, and then boom, we get entry and premium. And keep in mind, guys, like technically in the higher time frame, the fib would be from here to here, okay? It would be from this high to this low. Why? Because you can clearly see this is the most obvious defined high in this matter of time right here, and this is the most obvious defined low. But if you're really trying to get entries, I'll draw from the most recent swing high to recent swing low. I would only draw the fib from like the ranges, from the daily ranges, in order to see if you're on like premium or discount in the higher time frame. So that's what I use this for. So like knowing this, sometimes if I know we're in premium in the higher time frame, sometimes we might not hit premium on the lower time frame. So for example, in this is obvious impulse. This is an obvious impulse. We never get entry. We make a new low. So I'm gonna make it down to the new low, and like you can clearly see, we don't really get a good entry. But even right here, when I drop from this low to this low, you can see we never hit premium on the short. Like obviously the optimal trade entry would be here, but we're already in premium in the higher time frame. So sometimes you might not need that premium entry if you're already in premium in the higher time frame. Same thing with shorting. And again, like right here, from this high to this low right here, so this low, not this low, because this is the most recent. So here to here, you can see that we don't hit premium, but we reject because on the high time frame we are in premium. Yes, these are the better and nicer entries, okay? Like in here, obviously we hit premium, but sometimes if you do see a fair value gap that's not in premium, but you know you're in premium on multiple higher time frames, then you can take it. If you're not in premium in the higher time frame, let's say you're in discount on here, then I would definitely wait for premium because that's one thing already going against you. So yeah, that's kind of how I do this. It has to be obvious and it has to be the most recent. And another thing I do like is I like to be supported by an order block. So like even right here, some people would drop from here to here, but I would not. Why? Because we have a defined order block here. So if we do get above this order block, I would definitely wait for this to short. But the chance of us getting this above this order block when the momentum is so strong to the downside, you can see we have a defined higher here. We have a high, higher high, lower high. So I'll draw from here to here. And this is the tricky part that some people get mixed up with. They want to enter here because they're like, oh, we're not in premium. But yes, we are because we have this order block here. We have a defined high, and the momentum's so down, and we have the fair value gap right here, okay? And yes, obviously this would be the safer entry. But again, if you really want to get your entries, you're going to have to start going to the 1 minute and looking for like smaller time frame premium dealing ranges and discount dealing ranges. So that is that for now. Also, if you do look in this example, we never even hit sell side yet, but we're very close. So that's another reason why I would have taken this instead of waiting for this. But yeah. Let me know if you have any questions. Join my Discord. Link is in the description. But yeah, other than that, peace out.